Good morning. Texas real estate forecast for 2026. And the bottom line is that Texas real estate is expected to remain resilient through summer of 2026, supported by steady economic growth, continued population inflows, and anticipated monetary easing. While uncertainty around interest rates, inflation, and energy prices persist, and Texas continues to outperform the national average across nearly every major economic indicator. So let's look at the economic backdrop, stability with cautious optimism. The current forecast assumes no recessions and no major new macroeconomics or geopolitical shocks. And economic growth is moderating, but remains positive. And the Federal Reserve is expected to begin cutting rates, which should improve capital market liquidity and transaction velocity. And inflation is projected to continue cooling even amid trade policy and energy price volatility. So let's look at the Texas versus US, a clear outperformance. GDP growth in Texas, 2.25 to 2.65, outperforming the US. Job growth nearly double the national pace. Income growth, strong and stable near 5%. And population growth continues to lead nationally at 1.2 to 1.6%. In interest rates, highest uncertainty, but mortgage rates are expected to ease into the lower six range, maybe into the top fives. And inflation and energy, moderating overall, but remain key risk variables. And these trends reinforce why capital continues to favor Texas, particularly in markets such as Houston, Dallas Fort Worth, San Antonio, and select suburban growth corridors. Let's look at an asset class outlook. Let's look at single family housing first. And the market has shifted decisively toward buyers due to higher inventory and widespread price adjustments. And as rates ease, sales activity is expected to rebound modestly, marking the first meaningful growth since the pandemic. And median prices are projected to rise slightly, around 1.5%, toward 350,000 is the average, while rates remain flat to marginally higher. Sensitivity to interest rates remains the primary risk there. Now let's look at multifamily. Supply pressure is easing rapidly, with new deliveries projected to fall more than 50%, while near-term rent softness persists, especially in newly delivered properties. Stabilized assets should see flat to modestly positive rent growth, and fundamentals to improve materially heading into 2026 as oversupply clears the market. Let's look at office. Office performance remains bifurcated. There's Class A plus and premium assets in top submarkets, and those continue to outperform as tenants pursue flight to quality. Older Class A, B, and C properties face declining rents and ongoing space givebacks, and net absorption roughly matches new supply, reinforcing the importance of asset quality and location. Let's look at industrial. After pandemic era overbuilding, the industrial market is stabilizing, and by summer 26, absorption is expected to nearly match new deliveries. And rent growth resumes across major markets, including Houston and San Antonio, while Austin continues to correct at a slower pace. Now, long-term logistics demand remains intact. Now let's look at retail. Retail continues to be one of the healthiest asset classes in Texas. Limited new construction has kept supply and demand balance, supporting solid statewide rent growth. Population growth and consumer spending remain key tailwinds, with DFW leading performance. So let's look at some strategic takeaways for investors and business owners. And Texas continues to outperform nationally across growth, jobs, and population. And rate relief is the key catalyst for improved transaction activity. And how that will favor? Well, let's look at stabilized multifamily and industrial assets, or premium office space versus commodity office space, or well located retail with strong demographics. Now, exercise caution with assets that are highly rate sensitive or face structural demand challenges. So here's the overall outlook. Cautiously optimistic. The next 12 months favor disciplined investors focused on quality assets, strong locations, and Texas's long-term demographic tailwinds. That, my friends, is it for the day. Love to chat with you more about your specific situation. Please visit HoustonRealEstateBrokerage.com to figure out how to get a hold of me. We'll talk soon.